In today's episode of the Investing Mastermind Podcast, we're going to review the last and final part of the Berkshire Hathaway 2023 annual letter to shareholders written by its CEO, Warren Buffett. I'm Michelle Markey.
And I'm Signe Lumhold.
And today we're going to resume at the section called Non-Controlled Businesses That Leave Us Comfortable. And the first part I'd like to reflect on is how he likes to typically talk about Coca-Cola and American Express, as well as some of the other giants that make up Berkshire Hathaway's holding, especially Apple. But one thing I noticed that was very interesting here is Buffett did not talk so much about Apple at all. He talked about Coca-Cola and American Express, how they were founded in the 1800s, and Berkshire is not big on newcomers. And I think he gives a lot of praise to Coke and Amex. And yet, unlike in the 2021 annual letter, he only mentioned Apple once. And in 2021, he mentioned Apple 11 times. And I noticed in the latest 13F filing that Berkshire has sold about 10 million shares or 1% of their Apple holdings. So I don't know if Buffett is a little unhappy with Apple right now, but I find that very telling that he usually gives so much praise to Apple, and yet now in some of the top equity holdings of Berkshire's portfolio, he was a little silent on Apple, but way more expressive on Coke and American Express.
Yeah, there could be many reasons. I also think that Apple has been mentioned for such a long time now as being like the best company to invest in. And you can see, if you look at the S&P 500, it's one of those stocks that are most traded, that people like to hold and trade. And now maybe he wants to, shine light on some other businesses that are older and forgotten to a greater extent. And what I thought was interesting is the way that he mentioned Amex and Coke in this letter, like really detailed. I feel like, and maybe I'm wrong, but I feel like it's been many years since he actually went into such detail about his strategy and what exactly it is he's doing, what he's looking for. And he in the last annual meeting, he also said that I'm not going to discuss investments that I hold or I'm going to buy into and things like that. But now he's actually opening up a little bit, so I found it quite refreshing. He's talking about American Express, he's talking about Coke, he's also talking about Occidental Petroleum, which is a company he owns shares in. And yeah, so it's new businesses that he mentions. And he's also mentioning that, for example, with Occidental, that the way that they are investing into the business is that they own some options that allows them to buy the business at a certain price. So it's just interesting that he's kind of unpacking what is going on. And maybe he's always done it, maybe I'm just starting to read it differently, but I just feel that there's a little bit more context in this letter than there's been for quite some time.
Yeah, definitely on the Occidental purchase. And one thing I liked how he said is when you find a truly wonderful business, stick with it. Patience pays, and one wonderful business can offset the many mediocre decisions that are inevitable. So, to his point, he mentions a little earlier in the letter that their share of Amex earnings in 2023 considerably exceeded the $1.3 billion cost of our long ago purchase, like in the 80s or 90s when they last bought Amex. So if you follow his advice, he thinks of Amex and Coke as wonderful businesses and probably similar ideas with Occidental Petroleum and Chevron as well. And while they could own more Oxy, they choose not to own it because they don't plan to, lead that company. But they're showing how important some of these companies are to America's economy. And because energy is very much in the country's interest, I think that's why he's explaining more behind his rationale of why he invested in an Oxy.
Yeah, but I also, in my opinion, he's also explaining some of the amazing deals that he's made out there, right? So, Coke and American Express, those shares, when, the way he have lowered his basis price, they've given him dividends. He's probably bought options in some of these businesses. So basically, he probably got the stocks for free by now, and now he's just getting dividends paid by something that's absolutely free. And it's interesting how he's giving us a glimpse into some of these strategies that he's having. I particularly also, and I'm going to jump a little bit, we can always go back to talk about Coke and Amex, but I want to talk about some of the Japanese companies. It's something that's been mentioned a lot recently. Monish Pabrai recently made a video also explaining what Buffett did in Japan. And it is so interesting because a lot of people have been quite curious about how come he invested in Japan. Japan isn't necessarily doing that great, but it's truly a masterpiece that he's doing there. And it's something where, definitely maybe some more seasoned investors can do that same thing that he did there. So basically what he did is that he borrowed, yen at a low interest rate in Japan, and over time, the dividends and the value of the investments have grown significantly, right? So I believe that, he borrowed the money close to 0.5% interest, and then the dividends pays him 8%. So it's just been, yeah, it's incredible how genius it is. And I don't think, that it's something a lot of investors can copy, that kind of trade. But now he's opening up a little bit to what he did there, and it's truly genius. So maybe he's bragging a little bit, but I truly welcome that.
Wow. Yeah, it makes sense what you just said, because he said that their year-end market value of those 5 Japanese companies, Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo, they yielded 2.9 trillion yen, and that's equal to about, I think, $1.9 billion or so, or sorry, $19 billion. So I think that's interesting how they've earned 61% or $8 billion in unrealized gain. So their initial investment might have been something like $12 billion. So it's very fascinating how in just about 4.5 years, they've made this such a profitable investment. And you're right, he doesn't always go so much into detail about his holdings, but here he really explained a lot of, what their cost basis was, how much their unrealized gains are. I mean, it's pretty interesting how he's cluing us into these companies.
Yeah, and also because, he really, he, again, we're talking about getting something for free. I just think it's really amazing how they're not necessarily using a lot of their own capital for these kind of investments, but just getting paid back so much. He is really a genius in finding that. So I'm really impressed with what he did there, and I don't believe that it's anything that I could necessarily see that opportunity, but it's going to be interesting to see if any other investors like Monish Pabrai or anyone out there is going to be looking into something similar like this. And it's definitely something where he now teaches us to keep an eye out for some of these opportunities, yeah, as they come along. But I'm not saying it's going to be easy to find something and do something like he did there. It's also because he does have quite a lot of money that he can borrow to businesses.
Fortunately, if some of us are shareholders in Berkshire, we don't have to worry about trying to do the same thing Buffett did and trying to, finance our purchase of Japanese stocks.
That's
We can
true.
just own Berkshire and he's doing all the hard work for us.
Yeah, that's a very, very good point. Listen to Michelle, don't listen to Signe. Listen to Michelle.
Or maybe don't listen to me, because because Buffett said, "Listen to no one." So don't even listen to me either. I could be totally wrong. Yeah, that's kind of funny. But like moving on, if I may, to the scorecard in 2023 section, Buffett talks about how their insurance underwriting and insurance investment income businesses did well. However, there's a stark contrast in both the railroad and utilities and energy businesses doing way less well, and their other businesses and miscellaneous kind of just did marginally better than in 2022. And overall, their operating earnings is way up and above, like at $37 billion dollars compared to in 2022 about $31 billion dollars. So they've done well, but he said that he expected a lot of their non-insurance businesses to face lower earnings, but he didn't think it would be so bad at basically their railroad, Burlington Northern Santa Fe, and Berkshire Hathaway Energy. And he goes into way more detail of why they disappointed and what's been happening in those industries to cause some of this situation. And what were your thoughts, Sina, in this section of how their overall scorecard is?
We talked a little bit, or I mentioned to you before we went on, and recorded this podcast, that when I was reading the letter and I wrote about or started reading about rail, I was like, oh, I don't really want to read about railroads. It's not something that I found interesting. So I came back and read it later, and then it turned out it was such an interesting section. Again, he's just pouring so much knowledge into this section. So I take it back, Buffett. It's interesting. So one thing I like about this section is how he describes moat, how he describes competitive advantage. So in terms of rail, what he writes is rail is the most efficient way measured by cost, fuel usage, and carbon intensity of moving heavy materials to distant destinations. Trucking wins for short hauls. So what he essentially is saying here that's so interesting is that rail has a price mode and also a monopoly or toll bridge mode, in the way that when it comes to the long distance, then rail outperforms truck and road hauls. So I just found it very, very interesting in that way of thinking about it from a mode perspective.
Yeah.
Yeah.
And yet the interesting thing about that is while it is powerful and it is incredibly necessary and it's the largest of the six major rail systems, at the same time, the railroad business is very capital intensive and it eats a lot of capital. So he paints the
Mm-hmm.
picture of how challenging the railroad industry can be, and that, without it, we would notice a big pause in the economy if railroads stop moving a lot of goods. But it's difficult to maintain the present level of business. So he gives us the story of, while there are a lot of challenges, he has faith that they will continue to invest in the railroad business and, carry the responsibilities that it has to the American economy in spite of a lot of significant challenges facing its business. So
Mm.
it interestingly, not anybody can just say replace a railroad. He said that it's got $70 billion of assets on its balance sheet, and he figures the replacement cost of that would be $500 billion and take several decades. So not anybody can run a railroad, but he doesn't want to add debt to the railroad business. So they're going to have to figure out a way to improve its profit margins despite slipping against its five competitors. So interestingly, how makes me wonder, why is it that BNSF, given that it's the largest and it has Berkshire's backing, why did it suffer compared to its competitors in its profit margins getting lower?
Yeah.
So that's definitely a question mark to me. Like, why, given they have so much competitive advantages, why is it that their profit margins were not able to remain stronger than the competitors for now? Like, I think Buffett is trying to turn the battleship, as he says, in the right direction, but he didn't go into that so much. So he's probably, trying to course correct there, so to speak. Do you have any thoughts about why the railroad's profit margins might have slipped?
I don't, but I think it's a very good question. And I also want to say that if it was me and I had invested in a business and the profit margins started to slip, especially when comparing to their competitors, I would be out of that business. So I think that, when Buffett says that he still wants to be in this business and he still believes in it, well, that is magnificent. I myself would have definitely exited if I saw that the competitors were actually able to keep margins and my stock or business wasn't able to do that. So I think it's really interesting. But I also, just to what you said, Michelle, that it does have a strong competitive advantage is because if another company was trying to do the same, they would have to come up with 500 billion to actually compete with this company. So yeah, it is difficult, but I'm very, very much for margins. Margins are so important for me. So I would not have tolerated that the margins were impacted.
For sure. And he says there even more severe earnings disappointment happened at Berkshire Hathaway Energy. And he points
Mm,
to some of the existential threats happening in the energy and utility business, where the regulatory climate, like what happened in California with its largest utility and another threat in Hawaii, he's kind of just saying that there used to be this fixed but satisfactory return pact with states and the regulators, and investors now are worried about that these kinds of agreements that businesses had with the states are now being broken. And this is why he points out to the margin of safety of this utility business approach now is at risk of potentially falling apart in more states. And that's maybe putting at risk some of Berkshire's very own energy businesses that, while they are something that Greg Abel leads, I think that it's a big challenge to Berkshire, because he said he did not anticipate or even consider the adverse developments in regulatory returns. And so he made a costly mistake in not doing so, because even though there's a lot of American power needs and a lot of capital expenditures will be required to do things like, say, put electric wiring underground, as opposed to, when electric poles were above ground and then there were a lot of forest fires, those were very vulnerable. And then, when you have a lot of wildfires, you will lose your power, and that's a pretty big risk. But decades ago, people were not so interested in putting electricity below ground. So it definitely is pointing to a big existential risk in the energy utilities business.
yeah, I thought this section was so interesting to read because he really shows that he have little faith in this business. He said that there used to be a promise of a fixed return on equity. So, you were kind of promised a good return there. You had a great business model as an investor. Some states don't have that anymore. The forest fires have been really tough for BHE and as well as other businesses. And also what he's saying is that, just like you mentioned, that if the infrastructure needs to change in the coming years and they actually have to start putting some of those cable underground, and that's going to be a very costly affair, is what he's writing in this letter. And he had not thought it would be like that. He didn't think that regulators would change. So, this state by state promise of a fixed return on equity or ROE, that would change. So now he's actually facing something that he did not anticipate. And I just think it's interesting how he's kind of saying, I don't really believe in this anymore. And I wonder if what he's going to do is he going to try to sell BHE, that division, or so that Greg will focus on other parts of the business, or what is it he wants to do? I don't think he's being clear about it, but he's definitely being clear about that the future for the utility industry do not look great.
And I mean, as much as that's a concern, I say he summed it up. There's some problems there, but then he moved on to focusing on, where there's some bright spots of their insurance
Yeah.
business performing exceptionally well and setting records in sales, float, and underwriting profits. So that was the good news. And interestingly, they've done well in projecting the risks there with under the helm of Ajit Jain. So he echoes all of Ajit's achievements again and thought that that was, really well done, how their insurance business goes up. I mean, I think it makes sense because in insurance, a lot of the premiums have been going up because they're resetting what they think the risks are with whenever someone might get into a car accident, let's say with Geico, or some of the, say, weather related calamities. They're probably repricing what they're willing to insure, and that's they're adapting well their insurance model so that they can make sure they're covered there. Some things that I thought were also interesting in the insurance related business is that Berkshire will always attempt to be accurate in its estimates of future loss payments, but inflation, both monetary and the legal variety, is a wild card. So I think it's interesting why he says legal variety of inflation. I don't know if that's talking about Congress or, you know, what powers or influences are making inflation maybe go up, but Berkshire is reacting as necessary to the force of inflation and doing what it needs to do to ensure that their insurance operations stay strong.
Yeah, that's interesting. Yeah, I don't know actually what he means by that either. One thing, and it's totally different, but Buffett has a lot of humor, and I think throughout this letter we can really see his humor shines through. One thing he writes about the insurance industry that he also found out was, beyond that, we've learned, too often painfully, a good deal about what types of insurance businesses and what sort of people to avoid.
Mhm.
The most important lesson is that our underwriters can be thin, fat, male, female, young, old, foreign, domestic, but they can't be optimists at the office, however desirable that quality may generally be in life. So I can tell you, I would not make a good underwriter. I thought that was such a fun little section there, and really describing in that, oh yeah, we can't have something that's too rosy in that position. It needs to be someone that takes it seriously.
And yet, despite that, he said, Bertie, you can feel good about the fact that you own a piece of an incredible property and casualty operation that now operates worldwide with unmatched financial resources, reputation, and talent. It carried the day in 2023.
Yeah, exactly. So the annual letter here is coming to an end, and he ends the letter with inviting us to Omaha. There's another Berkshire annual gathering on May 4th in Omaha, and if you're a shareholder, you have tickets to that event. All you need to do is you need to prove that you are a shareholder and you can get in. And he mentions that there's going to be 3 people attending the event this year. It's going to be Greg Abel, and Greg is ready to be the CEO of Berkshire tomorrow. And then Ajit Jain will also join from the stage in Omaha this year, along with Buffett. And then, of course, Charlie Munger will be greatly missed. But one thing that he writes at the end here of the annual letter, which is also fun, is Munger was born in Omaha, Buffett was born in Omaha, Bertie, who is a great investor, was born in Omaha, and also Greg Abel lived there for a while. And Buffett writes, so what's going on? Is it Omaha's water? Is it Omaha's air? Is it some strange planetary phenomenon akin to which has produced Jamaica's sprinters, Kenya's marathon runners, or Russia's chess experts? Must we wait until AI someday yields the answer to this puzzle. I think that is so funny. That also, he brings in AI in this. I love it.
Yeah, I thought that was hilarious too, how he finds a way to throw in kind of poking fun at AI.
Yeah, 100%. So, and also, I guess all of us that uses AI today to find answers to any question out there or help us write content or produce any sort of thing. So, yeah, it's absolutely great.
Yeah, and one thing that I thought was an interesting sort of parallel with numbers is that he mentioned on May 4th, 2024, you will see the three managers, which I think refers to Buffett, Greg Abel, and Ajit Jain, and sadly, no longer Charlie Munger. And a lot of people were wondering who else from the Berkshire Hathaway dugout is going to step up to base and be on that stage. And interestingly, it doesn't look like we'll see, say a Todd or a Ted up there. And I
Mm.
guess maybe he wants to keep that figurative fourth spot open for the spirit of Charlie Munger, because he also said, if you come to Omaha, you'll see the fourth edition of Poor Charlie's Almanac, and Charlie's wisdom will improve your life as it has mine. He ends the letter that also is dated with February 24 of the year 2024. So you can see this sort of, there's a little bit of a joke on May 4th. On May 4th, may the force be with you, as Star Wars likes to
Woo!
say. And I think that maybe Charlie is giving Buffett and those on stage, he's giving them some of that positive energy that Charlie had for many decades given on that stage. So I think that while we may only see three, but we will feel the force of four that Charlie used to be on that stage. And I think his spirit will live on, and we will all remember Charlie adding things like nothing to add when Warren Buffett might ramble about an answer. And we'll just have to play little bits of Charlie in our mind as we listen to Warren Buffett on stage this year.
Yeah, absolutely, 100%. All right. Well, we have gone through the letter in detail. I sure hope you listeners out there find this interesting, because we sort of went behind some of everything of what Buffett wrote in the letter that can be a little bit difficult, especially if you're new to investing, to actually understand what he's referring to. So I hope this walkthrough was great for you. We definitely enjoyed sharing it with you. So next time we'll be back with another episode, not on the letter, but on another investing topic. So we'll see you on Tuesday.
May the force be with you.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts, so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.